Good morning, everyone. So I'm here with Ryan Luechtefeld of Delmar Mortgage in O'Fallon, Illinois, and we are going to talk about why should I buy now with the prices going up. So thanks for joining me, Ryan, and answering some of our questions.
No problem, Cody. Looking forward to it.
Awesome. So let's start with the first question I have here is tell me what's going on right now as of February 2021 as far as mortgage rates.
Well, it's been an interesting week. I will tell you that. Mortgage rates are still phenomenally low. Historically speaking, some of the lowest we've ever seen. We've seen an uptick over the last week and a half. So rates aren't as low as they were, let's say, in December and January. But we're still seeing rates on VA loans especially still in the twos, and rates on conventional loans now in the low threes. So from a historical standpoint, it's just a phenomenal time to buy a house.
That's awesome. So that kind of leads into my next question. So with these rates being low, how does this impact the buyer's budget?
It's huge. So, we've done some math on it before as far as what a 1% increase in interest rate means to their monthly payment. And what I tell buyers all the time is what you're stuck with after you buy your house is your monthly payment, right? And so that's the most important thing to you. Obviously, what you pay for it is important because that affects the monthly payment. But guess what else affects that monthly payment? And that's that interest rate. So what I suggest people do, take a look at what happens if you want to buy a $100,000 house and have a rate of 4%, or buy that same $100,000 house and have a rate of 3%. The difference is huge. The difference is in the hundreds of dollars a month in a lot of cases. So it just makes sense, even though I know values are going up and have gone up over the last year, interest rates being so low just makes it a phenomenal time to buy a house.
So with the market right now, we have low inventory, we have the prices going up. It makes a pretty competitive market for buyers. So something that as a real estate agent, I always tell my buyers is to be prepared. And one way to be prepared is to find a lender like yourself. So can you give some advice to maybe first-time home buyer that is suggested to go find a lender? What are some things that they should be looking for in a lender? What are some questions that they should ask too?
Absolutely. Well, in this market, and I'll be honest, I'm biased, okay? I want people to use local lenders. But I do know that a seller who has 5 offers, if they look at a pre-approval letter from somebody like us, okay, somebody who's local and respected in the area, that pre-approval letter and that offer, therefore, is going to be looked at more positively. So if all things being the same to a seller, if one pre-approval is from a national company that isn't necessarily understands our market as well, and another pre-approval letter is from somebody local, 9 times out of 10, they're going to choose that one that's local, or probably 10 times out of 10, to be honest, if, again, all things being the same. So that's very, very important. It's something, especially for first-time home buyers, that they need to look out for, because there's a lot of people out there that are going to market to them once they do a search for new homes online. They're going to get a lot of cookies on their computer, and therefore they're going to see a lot of people market to them. But don't fall into the trap of not using somebody local, because it's just huge, especially, and more important now than probably ever before, because of what you just said with the low inventory, where buyers are competing against 5, 10 other offers. Well, again, that pre-approval letter from a local lender is just huge.
And in our market in particular, in the Metro East, we have a lot of military buyers. So is there anything special or specific for a military family or individual to look for in a lender?
Yeah, absolutely. Knowledge of VA loans. Knowledge of VA loans is huge. VA loans are unlike any other loans. The appraisal process is different. Putting money down is different. And whether they should put money down and how much money they should put down is different. And if loan officer is not used to dealing with VA loans, they're not going to be able to give the proper advice. I'll tell you a specific example that I see once a month. And I have buyers that are moving here from somewhere else, and they have already had a VA loan. Therefore, they're getting their second VA loan. And they don't want to put any money down, which they have that right when they get a VA loan. However, there's something called a funding fee. That's what has to be paid on all VA loans. It's an upfront fee that goes directly to the VA. If somebody's already used their VA once and now they're using their VA a second time, if they put no money down, that VA funding fee is going to be 3.6% of the loan amount. That's a big number. If they can somehow put 5% down, that VA funding fee drops from 3.6% all the way down to 1.65%. You're talking thousands of dollars up front. And so that's the knowledge that somebody who's used to using and working with VA loans has that somebody else may not. So that's really important. The other thing in Illinois specifically is people need to understand how the taxes work and how the VA disability works as far as and how that affects taxes. We've been doing this a long time, so we understand how all of that works. We understand how it works if the current owner of the house has VA disability and the new owner will not. And we understand how it works vice versa, where the current owner does not have the VA disability and the new owner will have the VA disability. Again, going back to the last topic we just talked about, working with somebody local who has knowledge of those VA loans is just huge.
So something that I think many of us realtors get when we suggest shopping around, or they give us a pre-approval from a large commercial lending company and we suggest them to go to a local lender, is, well, I don't want to reach out to a local lender and then run my credit score. It may ruin my credit. Can you speak on that?
Yeah, it is not a myth. It is true that if you have multiple people run your credit, it will bring your credit scores down. There's a loophole, if you will. The credit bureaus and these algorithms that they use to come up with credit scores understand what you're doing if you have multiple people run your credit in the same industry in a very short period of time. And I'm talking about 2 to 4 weeks. So if somebody talked to Chase, we'll use them for an example, or some national company a week ago, and they got their pre-approval letter, and then they spoke with you and you did your job properly and said, listen, I encourage you to talk to somebody local. If I run their credit a week later, it does not go as another inquiry on their credit report. So it has zero effect. It's similar if somebody goes to buy a car. When you go buy a car, unbeknownst to you, in a lot of cases, your credit's run by 6 people on the same day. And I have people that worry about that. That is the exact same situation. Those 6 credit inquiries only counts as 1. Similar when you're going to buy a house. You should shop around. So if you spoke with somebody a week ago and you're going to speak with me today, it does not affect your credit scores if I'm going to run your credit today.
Okay. That's good. I'm going to kind of switch it up a little bit to existing home buyers. So the rates are crazy low right now. Is there a golden rule of when to refinance your home?
No, there's a lot of myths out there. I've heard people say, don't refinance unless you lower your rate by 1%. What I tell people all the time, it's cost versus savings. One thing as far as the savings is concerned that you have to know when you go to refinance is, how long am I going to be in this house? And if you're only going to be in this house a year and I'm going to charge you $2,000 and your rate's only going to go down 0.5%, the savings you'll see over that year won't be more than $2,000, so don't refinance. But if you're going to be in that house for 10 years and I'm going to charge you $2,000 and your rate's going to go down 0.5% and you're therefore going to save $100 a month, let's say. Well, guess what? Over that period, that $100 a month adds up to a lot more than the $2,000 fee. So there's not a golden rule as here's when you should do it, here's when you shouldn't. But what you just have to look at is how much is it going to cost me and how much savings will I see over that time. On a similar note, one of the things we do get a lot of when people talk about refinancing is I don't want to start my loan back over. I've paid it down for 3 years. I don't want to go back to a 30-year mortgage. Therefore, I don't want to refinance. What I tell people all the time is, that new 30-year mortgage you have, that 30 years is the maximum amount of time you have to pay your loan off. Nothing says you can't pay it off early. So going back to the scenario I mentioned where somebody saved $100 a month on their monthly payment because their rate dropped 0.5%, that same person can just add that $100 to their monthly payment every month. In other words, continue to make the exact same payment they're making today. And now instead of their loan being paid off in 27 years, it's paid off in 24 years, saving them tens of thousands of dollars.
No, that's a great point. To kind of wrap up here, you're someone that I personally and professionally trust. You're great to work with. Your team's phenomenal. Is there anything that you want to add to those listening as far as a buy or sell standpoint or existing homeowners?
Well, everything you say, I like where you were going with that. I appreciate you saying all that. Going back to the local lender part, that's huge. I've been doing this personally for 16, I guess probably 18 years now, all in this market. I do 80% of my loans specifically in St. Clair County and the surrounding counties. Work with military home buyers all of the time. As you mentioned, we have a fantastic team. You can come in and see us anytime you want. And we're in the same building as 1818 Chop House. So go get a drink after you're done with our meeting. But we've been doing this a long time. We have great partnerships with people like you. And I think that helps as well when the real estate agent and the lender are used to working with each other. It just makes the process very smooth. And it isn't always a smooth process.
Right.
But if everybody's on the same page and people are used to working with each other, it can and should be a simple process and a smooth process and a happy process where that closing date, everybody's elated because you got to where you needed to be in the time you needed to get there.
Yeah, I totally agree. I mean, when that's something that clients don't always see is behind the scenes collaboration, and that is huge. And I'll have to say, you and Delmar Mortgage, your team, you've always been there, saved some deals for me, and I greatly appreciate it. You're great to work with. So those listening, look up Ryan, Delmar Mortgage, O'Fallon, Illinois. They're great people. So thanks for your time, Ryan. I appreciate it.
Thank you, Cody. No, this has been fun.
Yeah, absolutely. Take care.